Hey guys, this is a Forex price action trading course. This is lesson number 13, using double tops and bottoms to gauge the market bias. Okay, let's get going. Alright, here's a lesson overview. First, I'll be going over gauging the market bias with legitimate double top and bottom patterns. And then I'll go on to gauging the market bias with fake double tops and bottom patterns. And then finally, I'll be going over some basic paradigms, or in other words, some basic rules that you need to understand in order to gauge the market bias with double top and bottom patterns. Okay. Alright, gauging the market bias with legitimate double tops and bottom patterns. Here's number one. You want to analyze for legitimacy. So we want to analyze the double bottom pattern for legitimacy using what we learned in lesson 9. Okay, so for this example, I'll be using this double bottom pattern right here. Okay, so let's analyze it for legitimacy. Okay, so let's go through the rules. So the second peak's low must at least reach the first peak's wick low price level, in which it did, right? Moreover, the second peak cannot close beyond the first peak's wick low price level, in which it didn't. And finally, there must be at least 10 candles between these two peaks. So let's go ahead and count them. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Okay, so we had 11 candles between the two peaks. So we cleared that also. Now let's go on and see if the prior trend was in the correct direction. And in this case, we want the prior trend to be down. All right, so we'll zoom all the way out, then bring the double bottom to the right side of the chart. Okay, so that double bottom is right here. And if we look to the left side of that double bottom, there are no lower lows to the left side of this double bottom, which means the prior trend before the double bottom was down. Thus, it is in the opposing direction. So we clear that also. Okay, let's zoom back in. Okay, so we found that this double bottom right here is in fact legitimate. Okay, let's go on to number 2. All right, number 2. Discover the height target. So using the distance from the first peak's wick low price level to the neckline, project out a target price level. Okay, so that first peak's wick low price level will be right here, and the neckline will be right here. So we want to take this distance right here and then project that out into the future. So generally that target level will be in this general area right here. Okay, let's go on to number 3. All right, number 3, consistent added strength. So until the double bottom's target price level is reached, there is consistent added strength between the second peak stop loss level and the projected target price level, in the direction in which the legitimate double bottom propels price. Okay. All right, so that second peak stop loss level will be right here. And again, that projected target level was generally in this area. Now, every pivot between these two price levels will have consistent added strength long in this case, due to the legitimate double bottom. So that'll be this pivot, and these pivots here. So all these pivots here, even if there are no other price characteristics that add future strength long, they automatically have a plus 10 future long strength, just on its own. However, just remember, once price reaches that projected target price level, all these new pivots here no longer have this added plus 10 future long strength on it, because it reached the projected target price level. Okay, so now let's go on to measuring the market bias with fake double top and bottom patterns. Okay, next slide. All right, gauging the market bias with fake double tops and bottoms. Okay, we'll go on to number 1 again. Okay, analyze for legitimacy. So analyze the double top for legitimacy using what we learned in lesson 9. Okay. All right, we'll be using this double top pattern in this example. Let's analyze it for legitimacy. Okay, so the second peak reached the first peak's wick high price level. Moreover, there's no breakout of this first peak's price high level on this second peak. And there's obviously more than 10 candles between this first peak and second peak. Now let's go ahead and see if the trend is in the opposing direction, which in this case, since this is a double top, we want a long trend prior to this double top. So let's go ahead and zoom out. Okay, so here's that double top right here. And we have higher highs on the left side right over here, which means the trend prior to this double top right here was actually down, which is not in the opposing direction. So at this point, we found that this double top is a fake. Okay, so let's go on to number 2. All right, number 2, discover the high target. Using the distance from the first peak's wick high price level to the neckline, project out a target price level. All right, so the first peak's wick high price level will be right here, and the neckline will be right here. So we want to project out this distance from this neckline to get the projected target level, which is generally in this level, right? Okay, let's go on to number 3. Okay, number 3, consistent added strength. So between the projected target price level and the second peak stop loss price level, there's consistent added strength in the direction in which the fake double top propels price. All right. Okay, so that second peak stop loss level will be right here at this wick high. And that projected target level was generally in this area right here. So any price action between this stop loss level and this projected target level down here, there's consistent added strength long to every pivot. So that would be here, 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 and here. So even if there are no other price characteristics at these pivots, there's automatically a plus 10 future long strength added to each one of these pivots, just because it's between this stop loss level and the projected target level. Now again, you just want to remember, when price reaches the stop loss level, which was right here at this point, every pivot after that no longer has an added future long strength to its pivots, because that stop loss level right here was already reached. So none of these no longer have that plus 10 future long strength. All right, so now let's go over the basic paradigms that you have to understand in order to trade these efficiently. Okay, next slide. All right, basic paradigms. So the higher time frames double top or bottom situation creates more strength than the lower time frames double top or bottom situations. Okay, let's go back to that example we used earlier. So we learned that this double top right here was actually a fake. But let's see if the same double top on the 1 hour chart was legitimate or fake also. Okay, so on the 1 hour chart, that same double top is right here. So let's see if this is legitimate. Okay, so the second peak reached at least the first peak's wick high price level. Moreover, there's no breakout of that first peak's price level on the second peak. And obviously there's 10 candles between the first peak and second peak. Okay, so let's see if the prior trend is in the opposing direction. So in this case, for this double top to be legitimate, we need a long prior trend. Okay, so let's go ahead and zoom out. Then bring that HNS to the right side of the chart. Okay, so that double top pattern was right here. Onto the left side of this double top, there are no higher highs, which means the prior trend was long, and which also means the prior trend was in the opposing direction. So we found that this 1 hour double top was actually legitimate, while the 4 hour chart's double top was actually a fake. So let's see what happens in this type of situation. Okay, we'll zoom back in. All right, so since this 1 hour double top was actually legitimate, that means that from this second peak stop loss level right down to the projected target level way down here, there's consistent added short strength to every pivot. So that would be these pivots here, all of these. However, since this is a 1 hour charge double top, we'll only give it a plus 5 future short strength for each one of these pivots. Now here's where it gets interesting. Now since the 4 hour charge double top was actually a fake, there's actually plus 10 future long strength added to each one of these 1 hour chart pivots. So in total, each one of these 1 hour pivots actually only have a -5 future short strength, because we're deducting the future long strength of the 4-hour chart from the future short strength of the 1-hour chart. Okay, so the higher time frames double top situation generates more strength than the lower time frames double top situation. All right, so let's go on to the next text. Okay, so even if you're only trading the lower time frames, you must at least use the monthly, weekly, daily time frames to always check the higher time frames double top and bottom situation. Okay, so if you're trading the 1-hour chart as your lowest time frame to trade, you must always check the 4-hour, daily, weekly, and monthly charts double top situation and include those higher time frame situations to analyze this lower time frames double top. Okay, all right, let's go on to the next slide. Okay, so that was it for this lesson. In the next lesson, we're going to go over using gaps to measure the market bias. So like we did with trend lines and price patterns, we're going to go over how to measure the market bias, this time with gaps. So we could ultimately bring all those together to get a more precise measurement of the market bias. All right, so like always, if you have any questions about this lesson, please leave it in the comment section. And I hope you have a great rest of the day, guys. And thanks for watching. Okay, bye.